Why does my community association need insurance? As an insurance agent that focuses on the insurance and risk management needs of community associations, I'm asked this question regularly by owners, board members, and community managers. All have different roles within their community, and proper insurance benefits them all. So why does my community association need insurance? The textbook answer is in front of you, but the simple answer is, without insurance, owners would share the full cost of a financial loss. An insurance policy is basically a contract where an insurance company agrees to pay up to a certain amount of money, your coverage limits, if something bad happens, as long as you pay your portion of the risk, your premium. A small single-family community may pay only $1,000 a year in insurance premium, but if they're sued, they're able to access up to their $1 million per occurrence general liability limit. Paying $1,000 and receiving $1 million are pretty great odds if you ask me. General liability covers slips, trips, falls, and other third-party lawsuits as defined by your policy. We typically have a per occurrence limit and a per aggregate limit. The per occurrence limit is the amount of coverage we have available given a singular claim or loss. The aggregate limit is the total amount of coverage we have available for the total policy period, which are typically annual policies. If we have a 1 million occurrence limit with a 2 million aggregate limit, that means if we have two $1 million claims, we would exhaust our $2 million aggregate limit. If we have five $200,000 claims in the first 6 months of the policy, we would still have a total of $1 million in general liability coverage available for the remainder of the policy term. If we have a $1.2 million claim, the insurance policy would pay $1 million and the remaining $200,000 would need to be paid for from the association bank account to cover the full loss. An umbrella policy could help provide additional liability protection for the community. Directors and officers liability, or D&O, provides coverage for the actions, inactions, decisions, or indecisions made by the board that result in negative financial consequence. With community association D&O coverage, the policy coverage can vary drastically depending on the type and the insurance company. Your best value is purchasing a policy with the broadest coverage forms available in order to ensure claims are covered by your policy. Not all D&O policies are created equal, but the right one is well worth the expense. Whether it's lightning, fire, water, hail, wind, we cannot prevent these perils from causing damage to the structures of a community, but we can ensure they're insured to 100% replacement cost with an affordable deductible so that when Mother Nature strikes, we're able to recover. One of the largest pitfalls in property insurance for community associations is underinsured buildings. Theft of association funds is much more common than you might think. Board members may have access to association bank accounts or credit cards. And how about the CPA, management company, or other trusted partners? Without crime coverage in place, if funds are stolen or spent without authorization, your association will not have any means of recovery. It's important to note not all crime policies cover willfully transferring funds to a bad actor, social engineering fraud, electronics fraud, or appointed persons other than board members. Purchasing the right policy is much more important than purchasing the cheapest one. All buildings located in a special flood hazard area should be protected by flood insurance. This can be purchased from the National Flood Insurance Program or through the private market. That said, just because you're not located in a special flood hazard area does not mean you cannot or will not experience a flood loss. If you do not have flood coverage and you experience a flood loss, the repairs still must be made and they must be paid for. In this instance, typically funding is done by special assessments to the association if the bank account does not have sufficient funds. Flood insurance coverage is much more affordable in non-special flood hazard areas, so it may be well worth the investment. Insurance protects the association itself and all that live within it. It's a benefit to all involved to have proper and sufficient insurance coverage in order to transfer the financial risks assumed by the community association to another financial vehicle, the insurance policy. Without proper risk transfer, communities and their owners could face steep financial consequences at the most unforeseen times. We cannot prevent all perils, but we can properly prepare for them as best we can. Thank you for taking the time to be with us today. If you have further questions or if there's anything else I can assist with, please reach out at any time. If interested in more information on community association insurance, or if you're interested in discussing your community's insurance needs, I'd be honored to assist. Thank you for your time, and I hope you have a great day.